once again, welcome to another episode of Trade Insider, a podcast series brought to you by the International Chamber of Commerce Academy. My name is Priyanka Satapathy, and I will be your host for today's topic on cryptocurrencies and its impact on international trade. Being the educational arm of the International Chamber of Commerce, we offer professional certifications on international business. Some of our best-selling programs include a certification on export and import and the latest update on trade terms, the Incoterms 2020. For today's episode, we have with us Henri Arslanian, PwC crypto leader and partner and the former chairman of the FinTech Association of Hong Kong. During the session, Henri will be talking us through everything that we need to know about cryptocurrencies, from being a currency of choice to facing restrictions with China's recent decision to ban its transaction by financial institutions and payment companies, and finally moving on to what are the things that people involved in international trade should look out for in today's ever-evolving global market. Henri, thank you for joining us today. We have lots of interesting things to discuss, so let's dive right into the topic. So, cryptocurrencies, especially the most popular and widely used, the Bitcoin, has evolved from being a form of payment to that of a store of value. It's being predicted that within a couple of years, Bitcoin is going to be the currency of choice for international trade. Can you provide your insight on this?
Yeah, first of all, Priyanka, thank you for having me, and thank you for the whole ICC community for having talking about crypto and Bitcoin, which is obviously a very, very important topic these days. And obviously, as you pointed out, there's been a very increased awareness and usage of cryptocurrencies, including Bitcoin, in the last couple of months. And especially when it comes to Bitcoin, obviously there's been a lot of retail activity on it, but also commercial activity as well. When it comes to, obviously, when we look at the characteristics of money, whether it needs to be store of value, a medium of exchange, and a unit of account, I would say that with Bitcoin today, we're not there yet. Of course, we use a lot of people now in the crypto community will buy Bitcoin as a store of value, as a hedge against inflation, as a hedge against currency devaluation. But as you saw today, as a medium of exchange, it's been actually quite difficult. The reason being, actually, Bitcoin is kind of digital gold. In the same way, you won't necessarily go buy coffee or pay a certain trade transaction using gold. The same thing is applicable for Bitcoin as well. However, that being said, one of the big part of it is actually what we call stable coins. What is a stable coin? It's a digital currency that is backed one-to-one by US dollars or other fiat currencies. And this area has been really booming in recent months. And what these stable coins provide is that we're able to send money around the world, do a payment or sell any transaction 24/7, instantaneously, for pretty much no fees. And that is a big difference. And what's really even more exciting is that we're seeing increasingly stable coins being used in international trade. Let's say, for example, you have a company from Southeast Asia that is doing business with a company in Latin America. If they use a traditional banking system, not only there's explicit fees, hidden fees, it doesn't work 24/7. In addition to obviously all the challenges they face, whereas these parties now can start using stable coins to make these settle these transactions more efficiently and effectively. So a lot of exciting developments going on, not only in cryptocurrencies, but also in broader digital assets, including stablecoins.
What do you think has been the reason for Bitcoin's sharp rise since 2017?
Well, absolutely. Bitcoin has been completely in the news in recent months. I think it's important. There's a couple of factors that have really driven the attention on Bitcoin and cryptocurrencies more broadly. One of them is really retail interest. I mean, to put things in perspective, before the bull run that we saw in Q1 of 2021, there was, according to Cambridge University, about 100 million people with an account on a crypto exchange. To put things in perspective, only 5 years ago, there was only 5 million. So we went from 5 million to 100 million. And now I can guarantee you there's at least double that following the bull market that we had the last couple of months. I think so retail interest has been obviously a big driver to it. Second has been really the entry of institutional investors. Again, in 2017, if any institutional investor wanted to enter the crypto space, it was very difficult. You couldn't get audited. There was no institutional grade custodians, even fund administrators. The whole ecosystem was not ready. And really, I have to say, in the last 12 months, we've seen really the institutional ecosystem really improve in incredible ways. Not only with the crypto firms that are now getting their own Big Four audits, SOC 1, SOC 2 certification, there's cyber certifications, but also with the traditional financial institutions entering the space. Over the last couple of months, we saw from financial institutions from Goldman Sachs to JP Morgan to Morgan Stanley to others enter the space. And this not only provides the to the crypto ecosystem the kind of the credibility and the institutional experience and expertise it needs, but also the kind of the grown-up factor that it deserves as well. And that has been obviously a big factor. And probably the third big element has been COVID. Obviously, COVID has changed many elements when it comes to the business and life around the world, but also had a big impact when it comes to cryptocurrencies. One of them, obviously, during COVID, people didn't want to touch paper banknotes. Many believed that it was actually banknotes could be a way for the virus to spread. But at the same time, which is a problem we see in any kind of financial crisis, we had record levels of cash in the system because people were hoarding money. And today, actually, most countries right now, we have record levels of cash in the system because in any kind of financial stability, people tend to hoard cash. This put a bit of a weird situation. And of course, this coupled with the record levels of quantitative easing that we've seen around the world has really obviously driven kind of focus and attention on what is the role of money, what does money get to value, and some of the potential consequences of printing money as well on the value of money. And of course, this has driven a lot of attention to Bitcoin. So there's a lot of these elements that have all come together that have driven Bitcoin at the forefront, as we have seen in the last couple of months.
In the last couple of years, Bitcoin has been competing with fiat currencies as a payment option within global manufacturing and trade. How has the payment option altered the power dynamics within the global trade ecosystem?
Yeah, it's a good question, Priyanka. I would say that today, when you look at Bitcoin being used for trade, some of the numbers are actually quite limited. We are seeing certain countries are trying to actually enter into settle transactions using Bitcoin or other cryptocurrencies, but this really becomes the exception rather than the norm. Where I think it's becoming very interesting to watch is on elements like stablecoins, for example, the increased levels of stablecoins being used in international trade, for example. That is one of them. As I mentioned previously, we have now over $100 billion in assets in stablecoins. But also, second, I would mention is how companies that are involved in international trade, that are involved in global manufacturing, that deal with different types of currencies, are looking at potentially putting some Bitcoin on their balance sheet. I mean, look at some of the very public names. Companies like Tesla, for example, that put $1.5 billion of Bitcoin, they bought $1.5 billion in Bitcoin, or others in Asia, companies like Nexo in the gaming space, Meitu in Hong Kong, and many others who have bought large amounts of Bitcoin. And often their reasoning is that if for businesses that are operating at the global level, they need to have kind of as part of a treasury Bitcoin as well. Again, whether it's to hedge against potential currency devaluation or other reasons. And this is actually one trend that we have seen in recent months. And I expect this trend to continue as we move forward, especially that it becomes easier and easier for large organizations to acquire Bitcoin and be able to store it safely from that perspective. The one caveat I would mention where there's still work to be done is although we have regulatory clarity, it's something we can discuss if you want today, where we also have some questions on tax clarity. For example, that is one of the challenges we have today is that, for example, if you hold Bitcoin in your treasury, on your balance sheet, what if the price goes down? What is the impact of that? And what if the price goes up? What's the impact of that? So there's a lot of these questions I think that still need to be settled over the next couple of months. And the good news is actually not only regulators, but also policymakers have been working on it as well. So I'm quite optimistic that we have further clarity on these topics in the foreseeable future.
Last month, Chinese regulators tightened restrictions that ban financial institutions and payment companies from providing services related to cryptocurrencies, marking a fresh crackdown on digital money. Do you think this decision will affect trade, finance, and international trade?
Oh yeah, absolutely. I mean, China, I think there's a couple of things to note for the audience is, for example, let's focus on Bitcoin. Bitcoin has been banned in China. Buying Bitcoin using fiat currency has been banned in China for many years now. Actually, you cannot operate legally fiat to crypto exchange in China today, for example. Although government courts have recognized Bitcoin as an asset where people can hold it as property, but obviously the buying and selling is not allowed. That being said, what's been really interesting in China today is that the majority of Bitcoin mining around the world, it's about 65% of Bitcoin mining around the world takes place in mainland China. Actually, majority happens in 90% or so happens in the province of Sichuan for one very simple reason, because there's a lot of hydroelectricity there, and obviously Bitcoin mining consumes a lot of electricity. So that's one of the reasons you see that happen in China. Now, unfortunately, as well, during the rainy season, that's not a problem. During the dry season, a lot of the mining also happens using coal. And one thing that's been interesting with the recent ban in China, there was a couple of announcements. One of them was in, let's say, mid-May, where there was three trade associations in China that gave a public warning investors of the risk of trading cryptocurrency, but also stating that obviously it's not backed by real value, if you want, and also that crypto buying and selling contracts are not protected by Chinese law, which was interesting. That was coming from three trade associations, but obviously the big development came when, from the arm of the state council, the FSDC, they literally basically put a crackdown on Bitcoin mining. So what are the consequences here? I think there's a lot of consequences on international trade. One of the things at a very basic level is that we are seeing right now a lot of the Bitcoin mining move away from China, but instead go to countries like the United States, Russia, Kazakhstan, just to name a few. I would not be surprised, even today, 65% of Bitcoin mining happens in China. I would not be surprised in, let's say, in 12 months from now, the majority of Bitcoin mining happens in the US, for example. And also there's an increased percentage in countries like Kazakhstan and Russia. Right now, as we speak, as we're recording this podcast, actually, we're seeing a lot of the activity where a lot of these miners are literally moving away their machines from China to some of these countries. So I think that makes it very interesting from that perspective, how this is going to affect the dynamics of Bitcoin mining and also the dynamics around cryptocurrency activity. One thing I'm watching right now is also how this is going to impact the broader ecosystem. For example, there was a lot of the US right now is becoming a big country, very leading country in crypto. They already have a very strong fundraising activity. They have some of the biggest exchanges are there. The majority of crypto funds are based right now in the US. I think with the rise of Bitcoin mining, and especially the abundance of renewable energies in the US, this could give the United States a big advantage when it comes to its positioning as a global crypto hub. And that affects various parts of the economy, not only on the financial side, but also international trade, finance, and international trade.
So, after watching Bitcoin prices fall through a trapdoor over the past month, they say that the bulls invested in the space have only one good option: stay long. What is your opinion?
Well, yeah, absolutely. Depends. If you want to ask, one of the favorite questions people like to ask is, what is the price prediction of price of Bitcoin, for example? And you're right. I think one thing you'll see in the crypto space, there's different camps. Some people, we call them Bitcoin maximalists, are believe Bitcoin is the future, and it will be used not only as legal tender, but also basically as the reserve currency, if you want, of the world. And of course, on the other side, you have a lot of retail traders, you have a lot of institutional traders who are entering the space as well, who are probably more short-term oriented from that perspective. I would say it's a very interesting time because what I hear in the market today, when I speak to a lot of the crypto hedge funds, a lot of the market participants, there's still a lot of optimism on Bitcoin. Of course, let's not forget that Bitcoin was trading at less than $20,000 at the end of the year, and now it's doubled, but tripled in value in the last couple of weeks. So there's obviously been a lot of activity from that perspective. There's still, I would say, a lot of positive momentum because of some of the reasons I've mentioned before. One of them is obviously the record level of quantitative easing we're seeing around the world, and people seeing Bitcoin as a hedge against potential inflation, a bit like a digital version of gold. Second reason there's a lot of optimism is the entry of institutional players, which is becoming easier for them to come and enter the crypto space. I mean, to give you an example, PwC, AMA, and Elwood released a report in the third week of May 2021, the third annual crypto hedge fund report, that has found that 47% of traditional hedge funds surveyed, they surveyed about $180 billion of assets, are either invested already in crypto or are looking at investing this year. And more than that, 86% of the funds that have already invested in crypto, 86% of them want to put even more capital in crypto this year. So there's a lot of these actually macro elements that are really driving a lot of interest. And actually, frankly, this is why many people are still quite bullish on the future of Bitcoin and cryptocurrency, including myself as well. Even price prediction, for example, when we ask our crypto hedge funds, what is the price prediction they have for the value of Bitcoin on December 31st, 2021, you know what their median price estimate was? 100,000 US dollars. And with total market cap of crypto between $2 to $5 trillion. So let's see, by the end of the year, I need to come back to see if this actually was actually turned out to be correct or was a bit too optimistic.
With all the fluctuations happening, do you think there will ever be a time when Bitcoin could become one of the leading solutions for doing business across international borders?
It's a very good question, Priyanka. What I would say is that today, if you're involved in international trade, international business, or you run operations in multiple countries around the world, you need to have at least a basic understanding of Bitcoin and the benefit that it provides. You may love Bitcoin, you may hate Bitcoin, but I think you have the intellectual duty to try to at least understand what it is and what it can do for your business. And there's been obviously many examples, like the developments are taking place. Let me give a very good example: central bank digital currencies. China right now is probably the leading country when it comes to CBDC, central bank digital currency. What is a CBDC? It's a digital currency that is issued by the central bank. So today there's really two kinds of central bank money. One of them is like fiat cash money, and the other one is the reserves that your bank holds at the central bank. The money that you as a business you have in your bank is not central bank money. That is literally commercial money. That is a plus and minuses, if you want, on the books of the bank. What makes it very special with a CBDC is that actually now there's going to be digital currency that is issued by the central bank. Let me give a very good example. China is years ahead of any other country on this. So if you're business doing business with China, China today is in very advanced stages of its pilot. In the last couple of months, there's been over $3.2 billion of actually CBDC being transacted. They call it digital yuan or the ECNY. There's been over 320,000 use cases. There's now millions of people with wallets of central bank digital currency. So if you're a country business doing activities and trade with China, at least understanding where we are right now with CBDC becomes very important. It may not be used for international trade immediately, but this is something you need to be understand. If you're in luxury business today, and you're selling a big chunk of your business, you have activities in China, you're in the clothing business, so on and so forth. This is stuff that you need to know from that perspective. So that's, I think, from a commercial perspective, I think anybody involved in international trade needs to be aware. Now, also, I think from a broader policy perspective as well, you need to be aware as well. At the time of recording of this podcast, the country of El Salvador, for example, just recognized Bitcoin as legal tender. What that means is actually when somebody has a debt, has an obligation to pay, now by law, if the law passes, which is likely to do so, you'll be able to settle those in Bitcoin. Also, for example, the payment of taxes. So, I mean, El Salvador is one of the first countries to do that. Of course, it's a small economy. It has about 50 billion or so GDP. Only a couple of million people. There's 25% of the population is under extreme poverty. 70% of the population is unbanked. But it actually sets a precedent for a country to actually use Bitcoin as legal tender. And let's not forget that actually today El Salvador is a dollarized economy. It's one of the few countries in the world like Ecuador, Timor-Leste, Palau, Micronesia, who use the US dollar as their legal tender for everyday life. So I think from that perspective, this becomes quite relevant, and it'll be interesting to see if other countries follow suit in the footsteps that El Salvador did. And again, this has an implication for anybody involved in international trade, international business, because it has practical commercial repercussions, like in the case of China, or more broader policy and kind of macro impact on your business, like it's the case on El Salvador, for example.
So, in a meeting of the G20 finance ministers and central bank governors, it was said that while crypto assets do not pose a threat to global financial stability at this point, we will need to remain vigilant to risks, including those related to consumer and investor protection, anti money laundering, and countering the financing of terrorism. So, people involved in cross border trade do have concerns about the unregulated or less regulated nature of cryptocurrencies in many jurisdictions. Can you share your thoughts on this, Rick?
Yeah, absolutely. Great question again. So this is a question that, I mean, as listeners may know, I'm actually a lawyer by background, and obviously compliance and regulatory compliance is something I spent many years of my life in. One thing it's important to understand today, if you want to launder money, you want to buy something illegal, you want to avoid sanctions, do not use Bitcoin. Use cash, actually, probably the most confidential way of payment that we have today. And frankly, even the traditional banking system, it's probably easier right now to launder funds than doing it via crypto. The one thing people often do not understand with cryptocurrencies, and for those of you listeners, I have on my YouTube page where I have a lot of educational videos on Bitcoin and cryptocurrencies that I share about. And one thing it's important to understand is that cryptocurrency transactions are all public. What I mean is that if tomorrow morning, Priyanka, I send you Bitcoin, that transaction will be public. People will not know that it's going from Henri Arslanian to Priyanka, but at least you know that this transaction has taken place. And this is actually gives a lot of benefits for law enforcement, for example. Case in point, at the time of recording of this podcast, the US government announced that they finally were able to recoup some of the ransom money that was paid for the colonial pipeline hack in the US. The only reason this probably happened was because they were using cryptocurrencies. And actually, this is actually one of the big benefits for cryptocurrencies for law enforcement is that there's a traceability element. So this is, I think, one thing what people forget. Often people used to associate Bitcoin with drug dealers, with criminal activity. That was the case in the very early days of cryptocurrencies and Bitcoin. It's definitely not the case today. To give you a bit of data, in 2020, according to Chainalysis, only 0.34%, 0.34% of crypto transactions were linked to illicit activities. And by the way, in absolute terms, that's only $10 billion. That's nothing, nothing. And to put things in context, according to the UN, every year, between 2 to 5% of global GDP is laundered. That's between 800 billion to $2 trillion a year. So again, so I find it very interesting when people mention Bitcoin, it's all drug dealers, it's money laundering, it's often that shows that people do not understand. Whoever says that does not have a good understanding of cryptocurrencies, or frankly, they're just turning a blind eye on the real amount of money laundering that is happening and the financing of terrorism and so on and so forth by the existing financial system that we have, and where a lot of the processes we have, from a lot of compliance processes we have, money laundering processes we have today, frankly, are more smokes and mirrors, frankly, just creating a lot of headaches and not really solving the problem at its root.
Moving on to the environmental impact of Bitcoin. Everyone from Tesla CEO Elon Musk to US Treasury Secretary Janet Yellen is suddenly worried about Bitcoin's energy usage. Does Bitcoins actually harm the environment?
It's a very topical question, because what you see with this today, let me start this way. Bitcoin is not a green asset, for sure, right? Again, to put things in context, the amount of electricity today consumed by the Bitcoin network as a whole is more or less equivalent to the country of Ukraine, for example, right? So there's a lot of electricity being consumed because the way it works, Bitcoin mining, every 10 minutes a block is created. And in order to be able to do this in a decentralized way, without any centralized authority, you need to have these miners, and that process, that what we call proof of work, which is a consensus mechanism, consumes quite a bit of electricity. Again, I have a lot of educational videos on this in various languages on my YouTube page, so listeners can read that if they're interested. Now, what it means is it as bad as many would believe? The answer is no. Today, if you look at the data from Cambridge University, around 76% of miners, Bitcoin miners today, are using some form of renewable energy, and at different levels. And the reason is very, very simple. Today, if you want to mining Bitcoin, you need to, one of the elements that is involved in your cost aspect of when you're mining Bitcoin is cheap electricity. The reality is the cheapest form of electricity we have today are renewables, namely hydro, solar, wind, and so on and so forth. So this is why now we're seeing increasingly move towards the renewable energies being used in Bitcoin mining and cryptocurrency mining as well. I think that's the macro level. A good example of this is the US, where many believe that actually, if today Bitcoin miners can act as the buyers of last resort. For example, there's a lot of, for example, excess renewable energy today in the US, for example. You produce a lot of solar electricity, but there's not enough buyers because often there's a grid congestion. A lot of the production of electricity happens in faraway areas where there's not enough people, but obviously from the time that electricity comes to the city, there's grid congestion and so on and so forth. And let's not forget that also the electricity demand happens early in the morning, but also late at night. So what the problem is when you're creating renewable energy, let's say solar energy, that mainly happens during the day. And the beauty with Bitcoin miners is that they can be located anywhere, and they can, in theory, turn on and off the machines whenever they want. So this is why these Bitcoin miners can actually be seen in many regards as the buyers of last resort, because they can buy this excess electricity and actually make renewable electricity production more profitable and more sustainable, which is, I think, a very important point to note. Now, a couple other things as well that are very important is that while we compare Bitcoin mining, we have to compare apples with apples. I often say the comparison the Bitcoin mining should be, we should compare Bitcoin mining is with the gold, for example. If we believe Bitcoin is a digital version of gold, then we should compare it to gold mining. I mean, the fun fact, which is I think many people do not realize, we talk about the impact of Bitcoin mining, but traditional gold mining is terribly polluting. The average wedding band that your listeners may be having on their lovely finger produces about 20 tons of waste. Depending on the data source you look at, gold mining is 50 times more polluting than Bitcoin mining. And of course, but nobody who's investing in gold or buying a wedding ring is not asking himself or herself that question. But when it comes to Bitcoin mining, that question is popping up. So I think that's one thing to note. And I'll finish it off saying that also we have to be, the Bitcoin industry, crypto industry is maturing a lot as well. For example, the reason Bitcoin mining is very polluting is because of what we call the proof of work, which is the Bitcoin mining activity. Bitcoin, for example, is based on proof of work. However, for many of the new currencies and the new cryptocurrencies in the market, the consensus mechanism is different and uses a fraction of the electricity used by Bitcoin mining. A good example of this is Ethereum, the second biggest currency, that is in the process right now of migrating from proof of work, which consumes electricity, to proof of stake, which consumes pretty much very little electricity. And this is why I think many of the new cryptocurrencies and the ecosystem is evolving. It's a good analogy of this is the first Model T car engine. When Henry Ford came up with the first engine, it was big, it was noisy, it was not very fast, and also it was consuming a lot of gas. And now we have Tesla. But the big difference in the crypto ecosystem is we did in 10 years what the automotive industry, for example, did in 100 years. So I think, yes, while there are considerations on the environmental impact of Bitcoin, I think we need to be very careful and look at the both sides of the equation and really look at the data and look at the potential that Bitcoin mining has on encouraging renewables and on the existing use of renewables that we're seeing in the market, which is something I think, unfortunately, is not often discussed as frequently as it should.
Being the educational arm of the International Chamber of Commerce, Henry, we do have a community who deal with trade, finance, and international business on a regular basis. In today's ever evolving global trade landscape, where things tend to change so fast, what will be your advice to them?
A part of my role, I've also been a university professor many years where I've been teaching crypto at university and I write books about crypto. My next one is coming up in a couple of months. And obviously I have a lot of content on social media where I produce a lot of educational content. And in various languages now, my educational content is available in French and Arabic and Chinese and of course in English. And there's many other languages to come. What's the reason I do this is because of education. I really believe that anybody today who's involved in international business, international trade, or frankly, more broader financial services as a whole, you need to have a basic level understanding of cryptocurrencies. Again, you may love it, you may hate it, but you have this intellectual duty to try to understand it. And most importantly, what can be the impact on your business, on your assets, on your trade, but also on yourself as an individual. And I think this is very, very important because I really believe this happens in various levels. For example, I spend a lot of my time teaching in universities because I think it's unacceptable that we're letting people graduate out of universities today without courses on fintech or cryptocurrencies. And the same in the business world as well. Unfortunately, I'm amazed every day when I see how clunky, inefficient, and frankly expensive it is to move money around the world for businesses cross border. I mean, today the average fee of a cross-border payment is 7%. 7%, and that's the average, by the way. In many emerging markets, your listeners may be involved in is double digit. And frankly, the user experience is absolutely terrible. The fact that we have these issues in 2021, when I can send you an email, I can send you a WhatsApp for free around the world instantaneously, is frankly an embarrassment. And this is why I think that cryptocurrencies will have a big impact on the future of finance, the future of money, and all of us. We have this duty to at least try to understand them. There's various ways of doing this. What I recommend to people is you don't need to read any technical documents. There's a lot of information online if you can read the articles, or if you like YouTube videos, you can go watch videos and educational videos on the topic. The second one I recommend to everybody is before you even think about the impact on your business, why don't you buy some Bitcoin yourself? Buy like for a small amount, an amount that you're very comfortable to lose. But at least that will kind of make you understand how it operates. You'll be able to actually, you have a vested interest to follow what's happening, and you can see how easy it is to send money around the world and actually send it to friends and family and so on and so forth. And this has been actually something that I've done. And also, the other thing I would mention to finish is actually ask people around you. What I found in a lot of companies, a lot of businesses, even in families, next time you have a family gathering, ask the youngest member in your family what he thinks about Bitcoin. And you'll be surprised. I find this actually with a lot of my students at university, a lot of people that I deal with. Some of the youngest people that I know are the most knowledgeable on crypto. Even at my job at PwC, some of the most knowledgeable people I hire are fresh out of the university. So having 20 years, 25 years of finance experience, financial services experience, in many regards is not that valuable in crypto because that's obviously a completely new ecosystem. And this is in the same way, right? In the same way we evolved, humans, we've evolved over the years, businesses evolved. We went from the telegrams to the fax to the emails, in the same way we've done with this with many other different technologies. I think this is something that we need to consider. And unlike the cell phone or the fax machine or emails, this has a more fundamental impact because it comes to the core of what is money, what is value, and that I think has an impact not only on international trade, international commerce, but frankly society and life more broadly as well.
That was a very insightful session, Henry. Thank you so much for your time. For everyone listening to the podcast, if you like the series, kindly subscribe to our YouTube channel Have a good day. Thank you.